Well, 2025 is in the books. Today, we'll look at how the portfolio did this week, and in particular, I'll take a look at NVYY to see how it's performed over this experiment. So stay tuned. I'm on the hunt for an infinite stream of dividend income, and my plan begins by trying to turn $1,000 of Robinhood's money into $1,000 of my money. And keep in mind, nothing I discuss today is financial, investment, tax, or legal advice. You have to do your own research for your investments. Let's get started. If you're new to the channel, or it's just been a while and you've forgotten, here's a quick recap of my plan. I invested a little over $2,000 of my money in PAAA, which is a NAV stable foundation fund. This is the anchor for my margin and will help keep me out of getting into a margin call. I'm a member of Robinhood Gold. I pay $50 a year for that membership, and I do that primarily to get the 3% IRA matching contribution. But one of the perks of Robinhood Gold is I'm able to access a free $1,000 margin loan. They'll give me $1,000 interest-free to invest on margin. I use that $1,000 of Robinhood's money to invest in 4 different high-yield ETFs. So far during the experiment, I did sell one of the ETFs, Misty, and purchase HOOW instead. For these 4 ultra-high-yield ETFs, I'm taking the dividend and dividing it in half. 50% gets reinvested back into the fund. The other 50% is invested into my forever fund, which I chose as SPY. This is a fund that I feel like I could keep forever and that will pay me for decades. The idea is that once I'm able to build up my position in SPY to $1,000, I can then redirect all of the dividends to paying off the margin loan, ultimately leaving me with $1,000 worth of SPY for free. But so far, that's not going great. Here's a look at how things look on Robinhood right now. For the week, the account was essentially flat, notching a hair loss. The value you see of $2,129 reflects the shares of PAAA that I own outright, plus my equity in the $1,000 margin loan. Unfortunately, that amount is negative, so that's subtracted from the account, leaving me with my $2,129 figure. On a side note, you may notice that there are some crypto assets listed on the side of my screen now. Robinhood had a holiday giveaway. 6 nights they were giving away different prizes. I entered in 5 of those nights and ended up winning a couple bucks worth of different cryptocurrencies each night. And now they appear right here on the side of my screen. If we go back and take a look at my buying power, you'll see I have $2.86 available. That's just uninvested dividends. My margin status is at low risk since I'm at 5.45% above my maintenance amount. If that percentage drops to below 5, the margin status changes to high risk. And I've been there several times. Now let's take a look at the dividends for the week. NVYY paid me about 36 cents per share for a total of $4.09. I believe that was about a 96% annual yield. Half was reinvested into SPY and the other half went back into NVYY. And so far it's paid me $104.59 in dividends since I've picked up the stock in July. COIW paid me 21 cents per share, which is only about a 55% annualized yield. And every time I run into a dividend under $2, I get stuck not being able to reinvest the dividend back into that fund, since Robinhood requires at least $1 to make a purchase. So the 53 cents dedicated to reinvesting back into COIW will wait until next week's dividend, and hopefully the two together will add up to be over $1. Now we can scroll over and check out HOOW. It paid me 83 cents per share for $1.78, and I'll be combining last week's 60 cents with this week's 89 cents to be reinvested back into HOOW. This dividend represents about a 90% annualized yield. SNOW paid me a little under 10 cents per share. That resulted in only a $1.68 payment. I was able to reinvest back into SNOY using last week's uninvested half, and I'll be reinvesting that 84 cents into SPY once I get some more dividends. This only represents about a 40% annualized yield, and the holidays have delayed the next dividend until next week, and then I think it'll get back to its normal Friday evening distribution. I believe we discussed the PAAA dividend last week, so we'll skip that one. I did get SPY dividends at 53 cents per share, and this $1.48 payment represents the highest amount I've received from SPY so far, so I guess that's a small win. Next, I want to take a little bit of a deeper look into NVYY. It's currently trading for $18.80 per share. Unfortunately, my average cost is $26.28. It had been performing well, but has really dropped off recently. Here's a look at my purchase log. You can see my initial buys were in July at over $27 per share. And since then, I've been making micro purchases weekly with half of the dividends that NVYY has been providing. But under the cost per share column, you can see a worrying trend. I was buying in the $27 range, then 26, 25, 24, 23, 20, 19, and most recently at $18 per share, leading to my final average of about $26 per share. Before we take a look at some charts, let's reacquaint ourselves with what NVYY is actually trying to do. The product overview section says that this ETF is designed to generate income through option strategies, primarily by selling put options on leveraged ETFs that track the 2 times long NVDA daily ETF. And then they break it down for us a little better. So this fund is selling options on a different ETF, NVDL, which is this leveraged fund designed to deliver 200% the daily performance of NVDA. And if we scroll down and take a look at the fund's holdings, we'll see outside of cash and treasury bills, its primary holdings are puts on NVDL. So although NVYY isn't leveraged, it's selling puts on a leveraged fund. This first chart begins when I made my initial NVYY purchase on July 18th, 2025, and is showing total return for 4 different funds. QQQ is here just for a baseline, and the total return was up about 9.5%. NVDL is the 2x leverage fund that NVYY is selling puts on. It's up about 8.4%. NVDA is the basis for everything, up about 9.5%. And NVYY, the fund I invested in, is up about 9.3%. So when we look at total return, things seem okay. The problem is when we change this and take a look at price return. Now you see a distinct problem. Triple Q as our benchmark is still up over 9%, NVDL 8.38%, NVDA 9.54%, and then NVYY down 30.61%. Now remember, in total return, all of these ETFs were similar. The problem is that it appears NVYY is paying out more than it can handle. It's selling puts to generate income, and yet the value of the fund has fallen over 30%. And this is just since July of 2025. And this plummeting share price is reflected in the dividends. When you look at column C, the per share dividends, we started off in the over 50 cents per share range. And then slowly it's drifted down to 47, 45, 43. We reached 40 in November, and we keep falling all the way down to about 35.5 cents this week. So NVYY has maintained a nice annual yield in that 95 to 100% range. But because the share price has fallen dramatically, that 100% yield is based on a smaller number, resulting in a lower per share dividend. And here's what that dividend looks like on a graph. NVYY started off when I made my initial purchase over 50 cents per share and has slowly drifted down to where we are now at around 35 cents per share. Looking back at price return, I'm really worried about this fund, as there's a pretty big gulf opening between NVYY and the other 3 on this chart. So here's a summary of how things stand. We just talked about NVYY. It's down about 13.5%. COIW and HOOW have just really tanked, down over 55% each. So my 4 ultra high yield ETF investments are down about 36.5%. SPY is now valued at about $154. So when I combine that profit with the losses from the 4 high yield ETFs, we're down about 21%. My concern continues to grow about the viability of this experiment, and I may have to start thinking outside the box on potential ways to fix this. But hey, I hope you've at least found this helpful or entertaining, and I'd really appreciate it if you'd hit the like button and subscribe for future updates. And remember, none of this is financial, legal, or tax advice. I'm just inviting you along my journey. And if you'd like to learn more about my small account margin strategy, check out the first 5 videos in the series. Good luck hunting those infinite dividends. Take care.